Hey guys, today I'm going to show you the most important part of analyzing a chart, which is top-down analysis. Usually, when you are a scalper like me, you start with a 4-hour time frame, go down to the 1-hour time frame, move to the 15-minute time frame, and then you can just simply also go to the 5-minute time frame. You can ignore it, go to the 3, and then to the 1-minute time frame, where you are going to catch those sniper entries and catch trades like these with 20 hour, which is insane. Now let's get right into the video, and I'm going to show you what you need to do to catch those trades. The most important part of analyzing a chart is top-down analysis. What this means is you want to zoom out from the chart. If you are a scalper like me who executes on a 1-minute time frame, I would suggest the maximum time frame you want to use is the 4 hours time frame, which we can see right here. The 4-hour time frame is more than enough for a top-down analysis, and basically want to first identify the trend on a top-down analysis on the higher time frame. This is the trend. We are completely bearish, and you want to mark out the zones where price can come into, which is this order block right here. Price will probably come lower to this order block. Now, what else we can do is move lower to the 1-hour time frame and mark out the zones where price can continue its trend from, which we can mark out right here. This strong order block. Why is it strong? I already made a YouTube video about that. You can watch this if you don't know what an order block is or how to identify strong ones. Basically, in short, we have taken out liquidity and had a sharp move to the downside, which broke the structure of this low. So this makes it a strong order block. On a 1-hour time frame, we can see price is now bullish and will probably come back into this order block. On the 15-minute time frame, we can see price took all the liquidity on the left and came and is now reacting out of these fair value gaps, which price can react from and move lower. But we always want to trade off our higher time frame point of interest. Another factor of trading is time. Currently, we are not in London session, so let's move and see what price does. Okay, London session is about to start, and we can see price moves higher. Let's see if price will come into this order block. So this could be our smart money trap, where people are going to stay right here and basically get stopped out if price will go higher into the order block. Okay, now price came into this order block on a 1-hour time frame. You can see a beautiful wick rejection followed up with another bearish candle. So this shows us this fair value gap was a trap. This high was a trap. We took out all of this liquidity. On the higher time frames, we are clearly bearish. We have this order block where price will probably come into. So these are all confluences to go short. Now let's move down to a 5-minute time frame, and where we will start to look for entries, especially on the 3 and 1-minute time frame. Later on, we can see we had this little build up. Price came directly into this order block and gave us a really sharp rejection. We still have this low, which is a previous day low left. On the 3-minute time frame, we can see this little order block where price can react out of. Let's move down to the 1-minute time frame, and that's where we are going to execute our trades to get those sniper entries with huge risk to rewards. Basically, we want to wait for a reaction. This is a good reaction. We can just place our stop loss We can play it safer, place it up here, or if you want a um, riskier trade but with better risk reward, you can also place your stop loss a bit above this high and zoom out to the 15-minute time frame and aim basically for a new swing low. You can do it to this swing low, or if you are completely bearish and if you're completely bearish, just aim for a new high time frame low, which means huge risk reward. You can see 23 risk reward, which is insane. These types of setups have huge risk reward, but are also risky. Don't get me wrong. We on a lower time frame, we are bullish. We are trying to catch the top. This is a risky entry. You have to fully understand market structure, or you're gonna get faked out at points like here at this smart money trap or this fair value gap where you entered right here. You have to understand time and market structure. More videos will come out on this channel to fully teach you about that. Let's just see if this trade would hit take profit or stop loss. Let's just see what happens. Okay, stop loss gets hit. Like I just mentioned, these setups are more riskier. We can adjust this order block. Or let's go back to a 1 hour time frame. Now London session is about to start again. This is also a good reaction on a 5-minute time frame. On a 5-minute time frame, we can see we broke this high, came back into this refined order block, had this little build up, swept all of this, didn't manage to break this high, shows us bearish order flow. On the let's just move down directly to the 1-minute time frame. On the left side, we still have this liquidity target, which is a good sign. It shows us bearish intent, and we have this small area where price can come into and react out of from. Okay, price broke this, so let's zoom out again. Broke this order block. We can remove this. This is a liquidity target. This is our strong high, and basically I want price to react out of this on the 5-minute time frame. This looks actually good. We have a small build up and an inducement, which I can show you on the 1-minute time frame. This was our build up, here our tiny inducement, and price reacted nicely out of this value gap. So this is a trade where we could re-enter. Stop loss at the high, zoom out, 1 hour time frame. We can just aim for this liquidity target, which is a safer play. If we would go lower, this would probably get all swept. If you want to play it more risky, just try to call the top. You can aim for a huge risk reward of 20 risk reward. Let's see what happens. Okay, almost at break even again after we swept this. So the more safer call would just have your take profit at 6R and aim for this liquidity target. Let's see if the other one would get hit. Okay. Seems like it got hit. That's exactly how you can get those sniper entries, this huge risk to reward. Just let me break it down for you again. What did we see at the beginning? We had this strong order block on a higher time frame. Also, what we could see is strong bearish order flow. We just broke this low, had this target on the downside, had this strong order block, and we had our traps where we as well got faked out. One was right here, the other was right here. And basically just re-enter when you get stopped out to get these sniper entries. I mean, this is insane. 20 risk to reward. If you would have just risked $1,000 on this trade, you just banked 20,000, and which is pretty cool. That's why I personally trade the lower time frames, the 1 minute time frame, but I always combine those time frames, my strategy, with higher time frame to get a better perspective on what the chart actually looks like, what the trend is, where our strong points of interest are. And for that, we need to have this top-down analysis. That's why it's so important. Every profitable trader uses top-down analysis. Don't forget to like this video, subscribe to this channel, and also follow me on X, where I will update you on my trades. Bye.